Bloomberg Audio Studios.
Podcasts, radio, news.
President Biden leaving, having made his speech following the signing of the bill worth some $95 billion in aid to Ukraine, of course, to Israel, as well as the Indo-Pacific. Within that, of course, is also the ban or divest of TikTok. Now, Biden is saying that the U.S. is actually going to start sending military aid to Ukraine within hours. He also goes on to say then regarding Israel that it must make sure that the U.S. has provided aid reaches Gaza. Let's get more of this with Kaylee Lyons for more. And first, the aid, Kaylee. What did you make of the speech from Biden?
Well, he clearly, Caroline, was trying to convey that this aid package was just as much about U.S. national security interests as it was about the interests of our allies. He said that repeatedly, specifically on the subject of Ukraine, the idea that Russia initially thought it could break the will of the Ukrainian people, then it thought it could break the will of NATO and the United States, and that resolve still stands in the words of of President Biden. He said, "We bow to no one, certainly not Vladimir Putin." And as you say, Caroline, he does indicate that within hours we will see starts of this aid moving toward Ukraine. On the subject of Israel, not only was he talking about the defense it could provide Israel in terms of air defenses, making sure that they can withstand a future attack like the one Iran attempted just 10 days ago, but he also made the point to talk about humanitarian aid, the idea that this will provide aid to Palestinian people, and he had pretty sharp words for Israel. They must make sure all of this aid reaches the Palestinians in Gaza without delay, going on to say he wants to see the hostages that still remain in Hamas's hands returned and a ceasefire deal reached. It was also interesting that he pointed out what this bill did not contain, which, of course, was any measures on border security. There had been, with the supplemental aid package, a border deal that was struck earlier this year between bipartisan negotiators in the Senate and the White House. It ended up going nowhere in Congress, in part in the face of opposition from former President Donald Trump. And he made sure to call that out. As we know, though, while border measures were not in it, there were a number of other measures that don't relate directly to aid to allies, including the seizure of frozen Russian assets, which, yes, can be used to fund Ukraine's war effort, but then, of course, also that TikTok divestiture bill.
Kaylee, one other area of importance to our audience as well at Bloomberg Technology is Indo-Pacific, Taiwan in particular, a part of this bill. In the context of semiconductor electronics infrastructure, just explain the parameters of the bill that relate to that region.
Yeah, this is a much smaller amount of money, Ed, than the money that's being provided to Ukraine or Israel. It's to the tune of about $60+ billion in Ukraine's case, $20 billion plus humanitarian aid in Israel's case. The Taiwan portion was much smaller, around $9 billion. And it actually is more broadly about the Indo-Pacific, not Taiwan individually, although Taiwan certainly represents a big chunk of this. And that kind of speaks to this idea that this in national security interest, they are trying to combat many different fronts and many different theaters. Russia on the one hand, and Ukraine, of course, the threat from Iran and Iranian proxies in the Middle East, but then also the ongoing threat in China, and making sure that there is security, given the importance of Taiwan, not only to the U.S. in terms of symbolism and representation of a democracy and wanting to maintain that, but then also, of course, the security in that region, given it is vital in terms of the supply chain, but also there are concerns with other U.S. allies and others in the region, like the Philippines, in regard to the South China Sea. So that is why you see it more broadly be the Indo-Pacific region that was also addressed and talked about a lot less when we were discussing this legislation.
Kaylee, when we think about Asia, when we think about China, we also think that at the moment of President Biden speaking on this signing of the bill, Shou Chew, the CEO of TikTok, also put out his own statement, actually using another social media platform of X to post his video response, saying, look, this bill is a disappointing moment. Outline thus far what this means for TikTok.
Well, it was interesting to listen to the language of Shou Chew in this video, Caroline, because, of course, what this legislation actually does is say TikTok will be banned in the U.S. if it is not divested within the requisite timeline, which is actually 9 months, with the possibility of a 3-month extension should a sale process already be underway, if TikTok or ByteDance specifically were to move ahead with the sale of its U.S. division. ByteDance, though, specifically TikTok, does not indicate that they're going to do so. So Chu said, we will keep fighting for these rights in court. He said the facts in the Constitution are on our side and that they expect to prevail, basically just signaling that this is going to be a protracted legal battle over this issue ahead. And despite what lawmakers may say that they want to see TikTok continuing to operate in the U.S., they just want it in U.S. hands rather than in the hands of a Chinese company that could be sharing data with the Chinese Communist Party. Chu seems like he begs to differ on that. He said in this video, make no mistake, this is a ban, and a ban on you and your voice, which is one of the issues that opponents of this legislation, specifically pertaining to TikTok, had around First Amendment rights and the idea that this could maybe be in violation of those content creators who are trying to use this platform to share their voice. Obviously, those concerns did not prevail over the wider concerns that proponents of this legislation had about the data security of Americans and potential Chinese manipulation of the content that they are seeing on this platform.
We will continue to cover this very big TikTok story later in the hour. Bloomberg's Kaylee Lyons, thank you very much. The other big and top technology story is Tesla. Tesla shares are up 12%, off session highs where they were up 16%, and on track for their biggest gain in 2 years, more than 2 years. 3 key points from earnings. Tesla is accelerating the introduction of lower cost, affordable EV platforms. There is a second point, which is an absolute focus on AI and autonomous driving, and Musk spelled that out for Wall Street. And the third point is that the first quarter was absolutely disastrous and investors are completely looking past it. Bloomberg's Dana Hull has been all over the Tesla story for 7 days straight, and she joins us now. Let's start with what I think the market zeroed in on, Dana, which is affordable EVs are coming sooner than we expected and not in the form that we expected.
Yeah, that was the big surprise. And there were sort of two things. The shareholder deck said that they were accelerating their more affordable plans. And then on the call itself, Musk was very bullish and said, well, we might even see these more affordable models by the end of this year. So that was a very big positive for investors that have been worried that Tesla's slumping sales are because they don't have a cheaper EV. And, the market is always very forward-looking. I mean, there was a lot of negative sentiment going into this call. I think there's a sense now that maybe the shares have hit the bottom. And Musk has been Tesla's CEO since 2008. He has been on every single earnings call that this company has had except for one. He understands Wall Street psychology, and he pulled a rabbit out of a hat and has them focused on the bright future yet again.
Yeah, not as bad as feared, Dana. Can you just outline how they accomplished, therefore? What questions did he answer? What transparency did we get on this new platform meets current method of manufacturing to create suddenly a cheaper vehicle?
Well, to be clear, the earnings print was terrible, but he kind of focused it on, on the future and basically kind of knocked down this Reuters story, which had said that there is no more affordable car, that the more affordable car is completely dead. Tesla is now basically saying that they have been working all along on bringing more affordable cars to market, and we're going to learn more about that on August 8th. So that was still a little bit murky, but I think the reason why the stock is reacting so positively is that he gave people hope that there is going to be more affordable models, but also he is just incredibly bullish on autonomy, and he has been for quite some time. But the way in which he spoke, the confidence with which he spoke, and he was basically saying, if you don't believe that we can solve this autonomous problem, you shouldn't be an investor in the stock. Was just kind of an indication as to how confident he is in the technology that Tesla has been working on for over a decade now.
Let's show a bit of what Musk had to say about autonomy. You're exactly right. He spelled it out for Wall Street in no uncertain terms. This is the plan. It's AI and it's autonomous driving. Dana, we did get some specifics, though. I think that we're trying to understand if we got clarity or any new information. In the shareholder deck, a purpose-built robo-taxi, and then on the call, an explanation of how a robo-taxi service would work. What did you learn?
Yeah, I mean, I think the big takeaway is like Tesla's coming for Uber. I mean, and their their robotaxi, which Musk also called the Cybercab, is like this combination Waymo/Uber service that will be fully electric and fully autonomous. And I mean, there's been some question as to, well, how does this like fit with the clean energy mission? It does, in that if you can utilize vehicles to be their most efficient, and if the miles that are traveled are electric, then you are diverting a large amount of carbon from the atmosphere. And so, this has been kind of part of the plan ever since Master Plan 2016, Master Plan Part 2 in 2016. But the shareholder deck actually shows like the Tesla app, and I mean, they're very much talking about a service that sounds like it's going to come sooner rather than later.
Dana Hall, phenomenal reporting across the earnings, with the podcast, going deep into really, the focus of Elon Musk.
And the bingo card.
You must be exhausted. Take a rest. We thank you so much. Let's go now from an investor perspective. Look, is this a time to be plowing into Tesla stocks? Certainly the market seems to be on the day. Nancy Tengler's with us, CEO, CIO of Laffer Tengler Investments in the house in New York. Thank you for joining us.
Thank you, Caroline.
Is this reaction right? This increase in Tesla shares on the day when ultimately the quarter just gone was ugly.
Yeah, well, I agree with Dana. Sorry for my voice.
All good. We'll give you a moment to clear it.
Pardon me. Elon gave investors what they wanted to hear. He's excellent at that, like any good founding CEO. But if you look under the hood and you have a long-term perspective, we think this is a time when you want to add to the name, and we've been doing that. It's not just the autonomous driving, which, by the way, they have 300 billion miles driven in their models, but also it's based on the Megapack. And the Megapack is growing at 50% a year. It's the most profitable division, and we think can be worth more than the car business in the future. So, and those are utility-grade batteries. So, I think that the company is pivoting. He's giving investors what they want to hear, and in 3 to 5 years, it's going to be a very different-looking company.
How interesting, because we are indeed going to be digging into the battery side of the equation a little bit later in the show. For the here and now, how cautiously do you add to a position like Tesla? How much do you see that the dip has already been bought? Are you buying day in, day out? Do you suddenly see a moment where you get that headline? Do you then anticipate what happens in August? How do you build up a stake in Tesla for yourself?
Slowly.
Yeah.
I don't think you want to chase this stock ever. It's extraordinarily volatile. We were adding it in January of last year at $104 a share. It went up to $240 or $220. We sold some and we bought some back a little too early. But I think what you want to look for is, I mean, for most of us, robotaxis sound crazy. I commute a third of a mile every day, and coming and going, I see a Waymo because I live in Scottsdale. Every single day, you can't go anywhere without seeing they're ubiquitous. And so being second to that market is not a bad thing. And I think Elon and the company has really been focused on improving that software. And the FSD software is pretty slick, and about 50% of Tesla drivers use it. So the adoption rate will increase, and the rest of us will come to the party at some point.
Nancy, good morning. It is great to see you. I want to scratch a bit deeper at that, because it is completely black and white from Musk. He couldn't be more clear to investors. If you do not believe in the autonomous driving vision, don't be an investor. But what's interesting, I guess, for institutional professional investors like you, so many had an affordable EV at the heart of their bull thesis. Musk is basically saying, nope, have autonomy at the heart of your bull thesis. What's at the heart of your thesis with Tesla?
Yeah, a good point, Ed. And coming from San Francisco as you do, you probably don't see the volume of self-driving cars that we see, but it's in our face every day in Arizona. So I think it's an important component of growth. Some say it's 60% of their number. What we're really focused on is the vertical integration of the company, the vertical integration of the Megapack. I went to the factory. I think I shared that with you not too long ago. It's compelling. And I think as we sort of grapple with green and renewables, you've got to have a way to store that. And Tesla is the industry leader, the low-cost provider. So that's at the heart of our thesis, but we know that it's a story stock, and you need EVs to come along, and you need him to be correct on robo. But let's also stipulate, he's never met his deadlines. He's directionally correct, but he's not on time.
Nancy Tengler, CEO and CIO of Lapa Tengler Investments. Couldn't think of a better person to speak to this morning. Thank you. Now, coming up, the UK increases scrutiny of AI investments from Microsoft and Amazon and their impact on competition. We'll bring you the reporting next. This is Bloomberg.
Now, the UK's antitrust watchdog, the CMA, is gathering information to determine whether the $4 billion collaboration between Amazon and the AI firm Anthropic, whether it threatens competition in the United Kingdom. It also said it was looking at Microsoft's partnership with Mistral and with Inflection AI. With us some more, Bloomberg's Catherine Gamel. And the CMA is not holding back on this. They're worried about this interconnected web. Spell it out for us.
Yes, so last week the CMA said it was worried about these interconnected webs of partnerships and investments into AI companies by the big tech firms. They're worried that, the big tech companies are using these as covert merger opportunities to, really have influence over this emerging technology and companies. So today, off the back of that, they've opened 3 new probes, and this adds to the probe that was already in the works of Microsoft's investment into OpenAI.
Catherine, very quickly, if the CMA moves forward, what are the repercussions?
Yeah, so right now it's just an invitation to comment stage, and if they find out that this is a merger under their different terms, then it will go to a phase 1. So that will be the first stage of the probe. If it then seems that it's more serious and there's going to be substantial lessening competition, it can go to a phase 2 probe. And then obviously at that point, in merger probes in the UK, they can ask for divestments of certain things, or they can block them altogether and tell them to unwind it. So, there's lots of different scenarios, but right now it's very much in the early stages.
Bloomberg's Catherine Gemmell out of London. Great reporting. Thank you. Coming up on the show, more on tech earnings with Dan Newman of the Futurum Group. Big conversation coming up. From San Francisco and New York City, this is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco.
I'm Caroline Hyde in New York. Ed, let's get a quick check on these markets because, while we are thick and fast in earnings season, we're also still trying to digest some big bond market action, big sales, a 5-year coming today after 2-year auction yesterday. The Nasdaq 100 managing to push above that 0.3%. At the moment, still holding on to gains more broadly as big tech wins out. Tesla we dug into. Interesting moves with the Japanese yen, basically weakening to levels we haven't seen in 2-3 decades. And we're expecting maybe some intervention as we break through this 155 level, so keep an eye on dollar strength versus Japanese yen. Bitcoin down versus the US dollar today. We're off by 2.4%, so there is still some anxiety in risk assets more broadly. Move on, have a little look at what's happening in terms of individual moves on the tech landscape. Now, not totally tech, but a lot to do with tech is Boeing. And this is interesting as we suddenly take a leg lower into the red. It had been flying high, more than 4% after earnings came in better than expected. But then that headline, crucial headline, the 787 is going to be produced on just 5 jets per month. That's a worry to investors right now. Tesla just soaring up 11% after, of course, awful first quarter in terms of revenue and profitability, but pointing towards yet still a focus on those cheaper, more affordable cars. I'm looking at Texas Instruments. This is why we're seeing the stocks, generally the benchmark of chip stocks, all higher today, up more than 6%. Really some optimism coming after the bell yesterday with its earnings spread across IBM. Maybe there's a deal going on with IBM. They're looking at HashiCorp. That's what's being currently debated by the market. We'll get more on earnings after the bell from IBM. Ed, let's dig into some of those earnings.
Yeah, there's a lot of names. IBM is a key one after the bell. Meta is one that is absolutely huge and we haven't touched on yet. Let's get to the what to expect and bring in the Futurum Group CEO, Dan Newman. I think let's start with Meta because everyone's talking about Meta in the AI context. Huge run up in market cap. It is completely outperforming its social media peers because of AI. What are your expectations for the name?
Yeah, first of all, good to see you both, Ed and Caroline. It's always good to join the show. Meta has been on an incredible run, and what it's recently been able to do, both in the open source community with its new Llama models, and of course being able to build on those models and apply them to their technology, has been nothing short of astounding. Last year it was all about the company getting operationally in line. They made the cuts they had to make. They started growing. The market and the street really reacted well. Now it's, can they continue that growth on a year-over-year basis? And they've had several continuous quarters of really great growth. But I think they can do it. And I think they did get a boost with what's going on with TikTok as well. And I don't know that that will immediately come into effect, but I mean, they are the biggest winner of that decision. And so what the market really should be expecting is this company is going to be talking all about AI today. They're going to be talking about how that's going to create better experiences. And they have this really committed platform. And unlike search, which generative AI is going to disrupt, the reason people are on Meta's apps and on Meta's platform is more about community. It's more about social. And I think they're going to become the biggest winner in this this AI boom.
When Meta's earnings statements hit and on the call, I'm going to be looking for commentary around ad pricing growth from AI and impressions. But it's a different AI story to Microsoft, to Google. That's next week. But is there a commonality between those two names in this earnings season that you're focused on?
Yeah, I think it's the ability to apply the AI technology that's being developed to driving that revenue, driving margin enhancement, creating stickiness on the platforms. Across the board, we know that the search market is going to be disrupted, attribution, click-through, but people spending time on social platforms, AI is only making it stickier, which is going to give pricing power to Meta, and you've got to like that a lot. I also really love what they're doing in terms of building their own technology. The company's become the open tech company. I mean, who would have thunk that in the world of Apple and Meta, that Apple was going to go closed and Meta was going to double down on going open? They're building these really robust, high fidelity models with Llama 3. And then, of course, now with Horizon, they're doing it for AR and VR. They're basically saying we're going to be the open platform for developing these next generation technologies. So there's just a lot to like. The one concern I do have is that on a year-over-year basis, they've grown so fast that this expectation from the street, they could have a great quarter and still miss. And I think you have to keep that into perspective that they've had 6 tremendous quarters in a row. At some point, that music's going to stop. I think we're going to be asking that question about NVIDIA later this quarter as well.
Yeah, with such a huge market capitalization increase on Meta, can they live up to it? But Dan, in that breath, we did hear Ed mention Microsoft and Google, Alphabet. Both of those are cloud names too. And I want to just focus on the cloud name that's coming after the bell today, because IBM, of course, big ideal on hybrid cloud, on-prem, of course, and then bringing it to the cloud where your data was going to be stored. I'm interested in what you make of all this rumor around a deal with HashiCorp and more broadly what you're expecting from the numbers.
Yeah, IBM's a really interesting one because I've been very fond of the growth and the strategy. I've spent time with Arvind Krishna, and he's really doubled down on hybrid cloud and AI. It's not trying to be a hyperscale cloud provider like an AWS. It's really saying we want to be the enterprise cloud provider, and we're going to double down on AI. And where's that coming through? Really with their Watson X product. So Watson X on a quarter-to-quarter basis has seen its numbers double the last couple of quarters. And you're still talking hundreds of millions of dollars, but this platform has a lot of what the enterprises need. It's the data strategy and management, and it's also the governance and compliance. We hear so much from these big cloud providers about issues and risks related to how data is trained and how people are consuming it. IBM has really leaned in on that governance, and I think large enterprises are giving the company a look and saying, we need someone that can really manage our data. So I'm expecting that number from Arvind and CFO Jim Kavanaugh to be a big focus today. Having said that, you asked about the Microsoft Googles. I mean, look, those two have been the fastest growing two clouds. I expect that to continue. Google came off a really positive Cloud Next. They're building out their own silicon. They're vertically integrating. And the one thing I'll say is whether it's OpenAI, whether it's Gemini and Vertex, all these large cloud providers are finding that people are building on more than one cloud. And AI has been the driver that's finally brought this multi-cloud strategy to life.
I just want to go back to what you're saying, almost with Meta, being like, they can still have a great quarter, but miss the very heady expectations. More broadly, we have seen this market near record highs still because of this AI play, this euphoria. Do you really put stock in the fact that these companies can live up to the high expectations of this quarter?
I'll tell you what, the entire market is on stilts that these companies need to live up to the expectation. There really is so much troubling economic data out there, whether it's the sticky inflation, whether it's higher interest rates, whether it's concerns about elections. You got, geopolitical issues around the world. And right now, AI has been the propellant of this industry. NVIDIA's numbers will create probably more concern than even these. But look, if Microsoft and Google have a tough quarter, and to some extent Meta too, people are going to start to be alarmed of whether or not this AI growth is going to accelerate to this multi-trillion-dollar opportunity in the near term. Because with higher rates, you got to discount long-term cash flows. You have to look against the value of growth, the forward multiples. But AI has kind of enabled us to all oversee it because Microsoft's OpenAI is accelerating. Google's AI is accelerating. Meta's AI is accelerating. So I actually think that this week and then next week with a couple of the Amazons and the Apples that are going to follow, if these don't come out well, Caroline, I actually am concerned that this could be what drives the next leg down. But having said that, I am optimistic that these companies are going to get more clear and prescriptive as to how AI is driving growth and how it will continue to drive growth, productivity, and efficiency, because people want to see earnings.
Yeah, want to see the proof that this is working. Daniel Newman, great to have you back, the Futurum Group. Thank you. Meanwhile, let's just turn our attention to the future of entertainment. The industry there could, depend on reaching a truly worldwide audience. And so, Netflix is doubling down on those global ambitions. Bloomberg Originals host Emily Chang sat down with Netflix's Chief Content Officer, that's Bella Bajaria, for a closer look at the entertainment giant's global strategy. Just take a listen.
I have had, lots of jobs in Hollywood and linear networks and studios. And I think there was a really domestic focus, and then you sell later or after the fact, right? You can sell your title internationally. We're a global service, and we're in 190 countries, so we were always going to do storytelling, locally in that way. So that's always just been a big part of our business. And 2/3 of our members are outside of the U.S.
Right. Well, that was my next question.
Yeah.
Is it paying off?
Yes. But I'd say it's also understanding that people in different countries, it's also the investment in local storytelling, right? To spend time in those places, not have a Western lens on what that is, and understand each, local kind of creative ecosystem. And so be close to the storytelling.
That was Netflix's Chief Content Officer, Bella Bajaria. Now, coming up, what the TikTok bill could mean for creators and businesses that use the social media platform with LTK co-founder and president, Amber Venz-Fox. That ain't Amber, but I'm sure she'll appear momentarily. Caro.
Is hoping. Meanwhile, let's just talk about another interesting story that's happening in terms of the destination of where certain companies are located. Oracle's doing again. They moved from California to Texas, and now, Ellison is moving Oracle to Nashville from Texas. Larry Ellison making that decision because, look, this is about a bet on the future of healthcare and provision of what he can do there after a big deal. This is Bloomberg Technology.
Let's get back to the legislation involving TikTok. Let's bring in Bloomberg's Alex Barinka. Alex, earlier in the program, we had that breaking news from Shou Chew, the TikTok CEO, basically saying, in summary, whatever happens, we're not going anywhere. He really leaned on this idea that this was an issue of freedom of speech. You've written a really smart piece in the last 24 hours about the sort of 270-day timeline. So the bill's signed into law, but there is a curious chronological occurrence relating to inauguration day post-election. Just explain your reporting.
Yeah, so this bill gives 270 days for ByteDance to separate from TikTok or else face a ban in the U.S., but there is a clause in there that allows the president at the time to extend that for an additional 90 days. Now, that 270-day deadline ends up being on January 19th. For the election savvy, you'll know that's the day before Inauguration Day. So regardless of what happens in this presidential election, President Biden will be on the hook for deciding, does TikTok and ByteDance get get an additional extension if there is no divestiture at that point. It's an important distinction to make because of what we've seen out of the leading Republican candidate for president, Donald Trump. Trump is the man who did write the first executive order to ban TikTok in the U.S. in 2020, but these days he's changed his tune. He's actually said he thinks TikTok should stay. So this kind of battle TikTok's had with D.C. has been very much pulled around by whichever administration is in power, and it seems with this happenstance timing that is not going to change through this next election.
Such smart reporting throughout this week and a long weekend. Alex Barinka, we thank you so much for all the nuances surrounding TikTok. Now we want to get the perspective of the creator right now. Are they still really focusing in on TikTok, on the shop, the commerce offerings? Joining us now, Amber Vensbox, president and co-founder of influencer shopping app and tech platform LTK. You yourself, in many ways, an influencer. You're then building a business that supports influencers. What are the questions you're currently fielding? Are people turning away from TikTok amid the volatility, the unknowns?
Right now, we're educating a whole new generation of creators of what's it like to live and future-proof your business in the creator economy. We've seen this now. We launched our business in 2011. At that point, we were talking about blogs. And then, let's see, next came Pinterest and then Instagram and then Snap and TikTok. So I'm old enough to have lived through several generations of platforms. And I see them now where they rise and then they maybe fall out of consumer favor. I like to say there's either an evolution of these platforms or a revolution. This is something that we have built for specifically at LTK. We're in kind of what I'd call the third chapter. So moving from that first chapter being blogs, second chapter social media, now third chapter where creators need to find a home base. What we've seen happen on TikTok, they've changed the paradigm for social media. It's no longer about building community. It's about interest-based feeds. So as a creator, I then have to hook someone based on their interest and then bring them back to the home base. And so right now we are in an effort to make sure that our creators who have started their career on TikTok understand that this is expected, it's prepared for, and they have actionable next steps.
I mean, that's really interesting. And what I'm also wondering is how many questions you're fielding on whether the influencer's role is to support one of their key platforms. What's been so notable is this time round, this sudden flurry of activity on the Hill, and it's whizzing through Congress. We haven't heard much from the influencer base. Shou Chew puts out a call to say, tell us your stories, make it clear to lawmakers as to why this is so important. Should you be fighting for TikTok?
Well, history always also tells us that the platforms are ultimately misaligned to creators. I hate to have to say that, but it's true. The business models just don't work for a creator. They're taking usually 100% margin on their ad revenue and not paying the creator. What the creator gets out of this, what I would still say the symbiotic relationship, is distribution and discoverability. And so a creator's loyalty is truly to their audience and not to the platform. And that's what they're feeling right now, is how do I make sure that my audience knows I'm here, I'm not going anywhere, and where they can find me, because I want to continue to be in a relationship with them, because ultimately that is what I have to sell. It's the trust I have with that community, which means I have to have one.
The technology secret sauce, Amber, for TikTok seems to be algorithmic, right? You've talked about interest-based feeds. And in a divest scenario, there's a lot of concern that algorithmically China might act. I don't expect you to weigh in on that, but I think there's a value you add in explaining to our audience how effective TikTok is, algorithmically speaking, in matching the content to its target audiences.
Incredibly effective. It's absolutely changed what it means to be a social media platform. Before this, you didn't really think or talk about like explore pages or discovery pages. It was truly about finding someone that you like and then be recommended another person, which was really more about machine learning than about AI. When TikTok entered the scene, their algorithm is so far superior to what we're seeing on any other platform that you could log into the platform, actually not follow anyone, and have a feed that felt like it was absolutely 100% created just for you. Like this platform was made for you. And that's why we see, if you look across on average where adults are spending their time, TikTok has almost an hour a day on average for adults. And that's much greater than, I think YouTube's in second place behind them, and then falling down behind are all of the other social media platforms. So that is their secret sauce. We know that, of course, in China, there's legislation that they are actually not allowed to export their algorithms. And so in any sort of a divestiture, from what the Chinese government is saying, the algorithm would not come with the TikTok property.
Amber, very quick, if you can't use TikTok, what's the next best thing?
LTK. Our creators are creating there every single day. They're making it a place where they can connect with their audience. Again, the most important thing that a creator has is trust. And that's why we see that actually with Gen Z, they're 3 times more likely to trust a creator over an ad. We now see that the vast majority of the population now says that they shop from creators. And so as a creator, if trust is what you're selling, how do you stay in touch with that audience every day? The job that social media was doing last year, they're not doing for you today. They're a discovery platform. And so you've got to have a place where you're growing your community.
Amber Vensbox, president, co-founder of LTK. Thank you so much. Now, coming up on the show, we're going to be joined by ScienceCo CEO Ilham Kadri for a discussion on EV batteries. This is Bloomberg Technology. EV industry top of mind after Tesla's earnings. ScienceCo is a crucial player in all of that. Specialty chemicals company about to break ground on a flagship site in Augusta, Georgia tomorrow. It will serve as North America's largest capacity production facility for polyvinyl iodine fluoride, a critical component of EV batteries. Joining us, ScienceCo CEO Ilham Kadri. The narrative from Tesla is demand on the EV side low. Hybrids are interfering. Why is the chemical compound you specialize in important right now?
Yeah, well, hello and good morning. Thank you for having me. It's going to be a great day tomorrow. We're groundbreaking in Augusta, one of the largest material manufacturing sites, which is going to come on stream in the next 5 years to cater more or less 5 million EV cars. We still believe that the long-term fundamentals of the electrification in Americas are still there. We believe that more than 30% adoption will happen between now and 2030. In the world, it's going to be more than half of the production's fleet will move to EV or hybrid. So yeah, you are seeing some delays for good reasons, right? Some softness in sales, but it takes 3 years anyway to build the plants, and we believe in this electrification fueled by, consumers, by the gigafactories. 10 are already in place, 27 are in construction, and our customers are demanding onshoring domestic manufacturing materials like ours to support the adoption and cost competitiveness.
Supply chain has been a constant headache for many. From your perspective, what is needed to ensure that we hit that level of adoptions of EV and hybrids over the next course of the 5 years?
You need cheaper cars, EV cars and hybrid cars, right? And you need that, and the technology in batteries is going to enable that, right? Just a few years back, half of the cost of a Tesla car used to be a battery. Now it's 15%. We're going to get it to a single digit. So our materials, they offer more efficiency in the batteries, higher electrical density actually, and therefore more autonomy in driving, right? Less driving angst. So I think the cost curve of the EV and hybrid cars are going to come down like any new technologies, and we are in enablers. Today we commercialize the generation 2 lithium-ion batteries. We are agnostic to technology. We go to LFP, NMC, and others, but we are already working on generation 4 and 5 solid batteries, which are going to get even smaller batteries, cheaper, more affordable, safer.
Well, congratulations on breaking ground tomorrow. We look forward to having you back on the show. ScienceCo CEO, Dr. Ilham Kadri, we thank you. Wow, what a whirlwind. That does it for this edition of Bloomberg Technology, Ed.
We are in the thick of it earnings-wise. Check out the podcast recap, in particular Tesla. Find the pod on Apple, Spotify, iHeart, and you can also find it, of course, on the Bloomberg platforms. Buckle up, big week. This is Bloomberg Technology.